Wall Street just triggered the biggest altcoin explosion we've seen in years, and you're right on time to catch it. This is the moment I've been preparing you guys for. The final rotation is underway. This is Wall Street and BlackRock setting up the biggest wealth event in crypto since the last major bull run in 2021. Imagine waking up and seeing the world's biggest funds pouring capital into the same coins you've been stacking for months. If you want to be early, if you want to front run Wall Street, now is the window. Today, I'm giving you the playbook, the data, the flows, the signals that every macro fund is trading before it hits the news. Right now, BlackRock's Bitcoin ETF generates more revenue than their legendary S&P 500 fund. Let that sink in for a moment. The biggest player in the world knows that there's more money to be made in crypto than their institutional funds. Institutional inflows are breaking records left and right. But here's what nobody is showing you. The rotation has only just started. The next phase, it's going to turn altcoins and DeFi into front page of every Wall Street report. And that, ladies and gentlemen, is one ride you do not want to miss. Let's ground this in numbers. BlackRock's iShares Bitcoin Trust, IBIT, has attracted $52 billion in new money since launching, and now commands over 55% of all Bitcoin ETF assets. In fact, the annual fees generate $187.2 million and has just overtaken BlackRock's own S&P 500 ETF. Even though the S&P fund is 9 times bigger, that's an institutional alarm bell for everyone who's ever said crypto's just a sideshow. The smart money sees the writing on the wall, and it's making them move even faster. As we covered in yesterday's show, publicly traded companies added 131,000 Bitcoin in Q2, an 18% increase, while ETFs added 111,000 Bitcoin, just an 8% increase. That's mass adoption happening in real time, and it's mind-blowing to see how these treasury purchases are adding up even faster than ETFs, something none of us saw coming just 6 months ago. Picture this. For the last decade, we dreamed of institutional adoption. Now, buying harder, faster, and with more conviction than anyone expected. This is the regime flip we've been waiting years for, but none of that matters if you haven't taken a position yet. Remember, we all fought long and hard through all the dips and crashes to get ahead of the suits. So don't let this institutional flood of capital catch you off guard. The crazy thing is, guys, is that institutions are just now coming in. And if you've been watching the channel for a while, hopefully you guys have some Bitcoin as well. And a lot of people ask me, Kyle, did you ever imagine that one day the institutions like BlackRock and guys like Michael Saylor and things would be buying your Bitcoin? Well, the truth is, guys, is that, I started accumulating Bitcoin heavily back in 2013 is when I first bought Bitcoin. And I started accumulating heavily in 2014 when I launched the Bitcoin lottery that I built, World Super Lotto. And by the time that was done in 2015, I had quite a bit of Bitcoin, but I never imagined that I would be selling it at all, because by then, I got in Bitcoin in 2012 the first time, and by 2015, I was pretty dang sure that this would be a world reserve currency of some sort. I wasn't sure at that point it would become a globally accepted, sovereign recognized store of value as a global reserve. I always thought maybe it would at least be a global reserve for maybe a worst case, like the kind of more nefarious actors, the criminals, North Korea, these kind of things. I knew there was a use case for that at some point, but it turns out Bitcoin is way more transparent, trackable on chain, and those are the properties that the governments like about it, right? And so now it turned out to be an even bigger store of value. But no, I've never considered selling my bags to these institutions, because what will happen is Bitcoin will continue to go up over the next 10 years, 15 years. And when I need to sell a little bit of Bitcoin to buy something, I do that, but I'm not trading Bitcoin. Let's zoom out for a second. America's unfunded liabilities have crossed, listen, $175 trillion, confirmed by official government reports. But Kyle, what does that mean? Well, unfunded liabilities are future promises. Things like Social Security, Medicare, federal pensions, and other long-term commitments that the government has promised to pay out, but for which there isn't enough money set aside. These are hidden IOUs stacked up over decades, now growing faster than ever. Just look at this chart. The line is literally vertical, Compared to the mountain of future obligations, every major crisis, World War II, the Great Recession, COVID, looks like a teeny speed bump. This kind of debt, it just can't be paid off through higher taxes or economic growth. Sooner or later, something's got to give. And when it does, the people hit the hardest will be those holding cash, bonds, or assets that can't keep up with inflation. That's why smart investors are looking at Bitcoin, gold, and productive real estate, and even quality equities, assets that historically outpace inflation and protect your buying power when currencies get devalued. The warning isn't just theoretical. With $175 trillion in unfunded promises, the only way out is likely more money printing and more currency debasement. The smart move? Start preparing now, before the next crisis forces everyone else to wake up. Ray Dalio said it best. When the debt is too high, the only move left is to devalue the currency and push asset prices higher. You're seeing that playbook live as capital flows out of the dollar and into hard assets, Bitcoin, ETH, and now even Solana. Now, look at the market's reaction. The S&P 500 is up 30% from its April lows, one of the sharpest rebounds ever recorded. Every time we've seen the slingshot year, a negative Q1, then a huge Q2, the next 2 quarters average double-digit returns. I'm talking about Bitcoin and our altcoin bags. But historically, this has been extremely bullish. The cycle isn't a Bitcoin-only story. For the first time, public companies are issuing debt and convertible notes just to buy and stake ETH and SOL. Tom Lee's BitMine and Joe Lubin's SharpLink have raised hundreds of millions of dollars for ETH staking. On Solana, DeFi Development Corp is executing the same MicroStrategy playbook. $112 million in notes, prepaid forward contracts, staking yield, and a $5 billion line of credit ready to deploy. You heard that right, $5 billion with a B. But these institutional moves are just the beginning. The floodgates are about to open even wider as new ETF products roll out, bringing fresh capital into many more protocols. And yes, when that happens, those same institutions will start targeting new altcoin exposure within their treasuries. Guys, Wall Street now loves crypto. They love crypto. This company buys crypto, boom, their stocks go up. This crypto company goes public, boom, their stock skyrockets. This guy offers an ETF with this altcoin, boom, it goes up. Wall Street now loves crypto. Last year they hated crypto. Now they love crypto. Now Orange Man loves Bitcoin. Wall Street loves Bitcoin. This is where we are in this world today. It's wild. It's completely different. Something that, to be honest, I didn't really see this coming, but the last 6 months have been a wild 180 in shift of policy, regulation, and now Wall Street loves crypto. Bloomberg's ETF desk just confirmed it. The vast majority of the top 50 coins will likely qualify for ETFs as the SEC relaxes standards. This means every major protocol, ETH, SOL, SUI, and beyond, will see institutional capital pour in through new ETF wrappers. And probably we'll see Dogecoin, we'll see WIF, we'll see Fartcoin. Imagine Fartcoin in these ETFs, institutional. So yeah, what's in your portfolio, John Smith? Oh, I've got Bitcoin, ETH, Solana, and Fartcoin. Remember, Wall Street now loves crypto culture. They can't deny. It's just, we're faster, we're smarter, we're better, we're younger, we're hipper, we're cooler. And the suits, they're getting a taste of that, and they like it, right? And they just understand this is where the world is going. The first Solana staking ETF just hit $33 million in volume and $12 million in inflows on day one. More than Solana and XRP future ETFs, but just behind Bitcoin and ETH spot. But don't discount the Solana bid here. Remember, we haven't seen a SOL ETF from the big players yet. BlackRock, Fidelity, and the other major issuers are still on the sidelines. When those giants step in, that's when the real wave of Solana capital could hit. Institutional appetite for altcoin yield is now proven, and real money flows, and SOL is just getting started. Anchorage is letting US institutions stake SOL natively. Ripple is seeking a US baking license. Billionaires Peter Thiel and Palmer Luckey just launched Erebor, a digital bank for crypto and tech. Just think about that for a second. For years, we've always said the herd is coming. And now the fastest runners have finally shown up. Coinbase is rolling up token management, derivatives, and privacy into a full stack crypto bank. This is the banking rails getting rebuilt live for the next $300 trillion rotation. And for anyone worried about the regulatory FUD, SEC Chair Paul Atkins says this.
Tokenization is an innovation, and we at the SEC should be focused on how do we advance innovation in the marketplace. And so I would argue here over the last several years, the SEC has been standing athwart efforts to innovate in the marketplace because things have been unclear. The rules have not been clear. We've had regulation through enforcement. That day is over. We are now, my whole goal is to make things transparent, from the regulatory aspect and give people a firm foundation upon which to innovate and to come out with new products and so that they know what they're doing.
The regime is flipping right now with the full green light for ETFs, RWAs, and altcoin adoption on a scale much bigger than most crypto degens ever dreamed of. The stage is set. The final rotation is about to hit altcoins. I mean, guys, we still have a very, very, very apathetic retail market. The parabolic runs and moves that sent our bags higher than we could ever imagine in 2017 and 2021, those guys still aren't here yet. Bitcoin just below all-time highs right now. Altcoin seeing major pumps today. This is driven by very few retail people who are still here. But I'm telling you, I haven't started getting those texts back from all my friends who always text me when we're well into altcoin season, and now they want to know how to get into the market. Those texts have not come back yet. Those people are not back yet. All of this money coming in is building this really crazy solid foundation. And the base of where we're going to see this parabolic explosion come from. And then probably when Bitcoin gets back to like $115, $120, and we see even more demand for ETH, this is when we're going to get those text messages coming in. This is when we're going to start to see retail coming back in. Retail FOMO will drive other FOMO. Price appreciation drives more attention. Attention drives price. It's this perpetual flywheel that goes. And so this bull run, we're going to see retail come back, ultra high net worth and traders on Wall Street and funds now getting into meme coins and getting into altcoins and it's going to be wild. But even with all this bullish news flow, there are key macro signals that could shift the tempo at any moment. The June jobs report was stronger than expected, with 147,000 jobs added versus 111,000 forecasted. And May's numbers were revised higher too. Unemployment dropped to 4.1%, beating estimates. The main takeaway is clear. A strong labor market takes a July rate cut completely off the table for now. And also, I don't know if you saw, but Trump called for Jerome again to resign. Will he do it? No, not likely. But anyway, Trump's calling for it. A lot of political pressure there. With job growth holding up, the Fed has less reason to open the liquidity taps in the immediate future, meaning no immediate rate cuts, no more big money coming in. That's okay. Bitcoin and ETH dominance is at 82%. Since 2019, every previous touch at this level has marked the rotation point for altcoins. This is where the smart money starts to slide risk down the curve. And the next alt season gets started. BTC volatility is scraping all-time lows. Even as prices sit at new highs, I want you to remember, when the market looks boring at the top, the biggest moves are brewing underneath. The coil is set and ready to spring to life at any moment. For the next 1 minute, I'll explain a setup I see playing out for any of you traders out there comfortable with puts and options. And for the rest of you, this is myself included, even if you're not a trader, it's interesting to see how TradFi is looking at this current setup. Right now, call and put options on Bitcoin and other majors are priced for a quiet market because traders are betting that nothing big happens. But when volatility sits at record lows while price is at all-time highs, any breakout, whether up or down, can turn those low-cost options into massive payoffs. If the next rotation sends Bitcoin or ETH flying, longer-dated calls could multiply in value as volatility spikes and premiums explode. On the flip side, if the market unwinds or shakes out, maybe on the back of some bearish economic data, before the Fed has acted, protective puts can suddenly gain huge value even after weeks of drifting. This is a setup that traders and funds are waiting for. When the market gets complacent and the price of insurance or leverage upside goes on sale, the patient money loads up on options and sits tight for the snap. A small allocation to options here can deliver outsized returns if the cycle delivers a big move that the data is signaling. So I think it's interesting to pay attention to these kind of more traditional types of moves. I'm not making any of these moves, by the way, right now, calls or puts. But what I do want to do is call out when we see something brewing that could be a good play. And as time goes on, we'll go and look, was that a good move? And this is how we learn. But we learn by observing, making observations, reassessing when the play plays out. And then we look back and say, would this have been good if we did this or not? But I'm curious, guys, let me know in the comments below, how many of you guys are traders versus how many of you guys consider yourself more of investors or speculators? I want to know how to tune some of these videos for the audience, for you guys. If you like these kind of observations that are geared more toward traders, let me know in the comments below. If it's over your head and you don't care and you just want to take positions in good altcoins and Bitcoin and know where the macro environment is, let me know in the comments below as well. And if you've been tracking the headlines, DeFi and AI are driving the biggest stories in crypto right now. Stablecoin legislation is moving through Congress, AI trends taking over Twitter, and breakthrough protocols launching nearly every week. Underneath all of this, DeFi remains the engine powering the entire ecosystem, setting new highs for active lending and quietly fueling institutional strategies with fresh liquidity. Now, that momentum is about to accelerate even further as AI agents and gasless infrastructure enter the chat. Now, I know the other day I mentioned that I'm mostly focused on major caps right now, but I'm still in the trenches trying to find altcoin gems, and I know some of you guys have been asking me for them. And today's video is sponsored by one that has serious potential and major partnerships. Now, before you go, oh, Kyle, this is a channel sponsor, blah, 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 like I don't care. I wouldn't have taken it on if I didn't think I had massive upside potential. So just hear me out for a second. And in a second, I'll tell you how to go validate this on your own. I think this one is flying under the radar, but it could explode at any moment. It's called OXGasless. It's quietly laying the groundwork for the next era of DeFi and AI. Their team has been building since June 2023, which is a really good sign that it's not a new fly-by-night hot narrative. Before most people even started talking about AI agents, and has already shipped real products, steadily growing their user base. If you want proof, just check out their CoinGecko chart. You'll see a protocol that survived and kept shipping through months of market noise. Here's why I think it's worth your attention. We're heading into a world where bots and digital agents will do more than just send you trading tips or shit posting on X. Soon, these AI-powered agents could be managing your crypto portfolio, paying your bills, booking your travel, and even negotiating on your behalf, all automatically, without you having to log in or even open an app. I mean, ChatGPT 5.0 is right around the corner, and it's supposed to be wild. AI, API integration and everything, right? And these APIs from things like this will be able to be built into these AI agents that are in the Web3 space. But these agents can't really move money, trust each other, or coordinate any kind of complex transaction unless you, the user, are constantly approving every single step. And then you have to sign gas transactions, all this kind of stuff, right? Until now, there just hasn't been a universal money layer for bots to safely, instantly pay each other or handle DeFi on their own. That's the real world problem OXGasless is solving. Think of it as a Stripe for AI agents, a simple, invisible payment and automation layer that lets AI bots send funds, trade, or even bridge assets across chains, all gasless with no wallet pop-ups or scary tech hurdles. For developers, the agent kit means they can plug their AI apps into DeFi, payments, and all kinds of automated workflows. And for users, it means the first taste of a world where your AI agent actually gets things done for you without you needing to lift a finger. Besides the tech, what makes OXGasless stand out is the recognition and traction they're getting from all sides. The Avalanche Foundation gave them a public shout out as a team bringing gasless AI agents to the AVAX ecosystem. You've got Sonic Labs, Bybit, and BNB Chain officially highlighting their work. The team has run hackathons at ETH India, partnered with top universities, and already racked up over 25,000 users and 100,000 on-chain transactions since launch. It's the kind of foundation that shows real adoption and network effect. Now, for the narrative traders out there and early adopters, two of the biggest names in the space, Elio Trades and Alex Becker, are building Black Hole, a brand new DEX that's built to put the community first. And they've picked OXGasless as the engine for all of their on-chain automation. This means when Black Hole launches with their airdrop and thousands of users flood in, their first experience of AI-powered DeFi will be powered by OXGasless. That kind of partnership is a type of integration that can put a protocol at the center of a major new market wave. And here's something to keep in mind. OXGasless is still trading at a teeny microcap. So of course it comes with higher risk, but here's the potential. Remember, other AI agent protocols like Virtuals, AI16Z, currently ELIZA, have already run billions in market cap. If the AI agent narrative explodes again, which I think it will, especially as people are building infrastructure for it to do things like manage your portfolio for you, be smarter than us, it only makes sense, right? I mean, AI agents will be able to trade better than us, so of course we'll be using them. And of course, if Black Hole's launch is as big as it looks like it would be, you can see the setup for serious asymmetric upside if you're early. So don't just take my word for it. What I've done to do some easy due diligence on projects is you go to ChatGPT, you take the O3 Pro model, and if you don't have the Pro model, I think it's worth it to get it. Why? Ask it to do due diligence on serious things that you're considering, whether it's OXGasless or whether it's anything else. Say, hey, ChatGPT, Kyle told me about the OXGasless thing, but it's a channel sponsor. Like, what do you think? Is it a good buy right now at $11 million market cap? And just see what it says. When I did this exercise before, I agreed to take them on the channel as a sponsor. And I was very surprised by what it came back with. And that's what convinced me to go ahead and do it. And I think that you should do that for everything, because it goes and looks at a ton of data and brings it back to you. O3 Pro is amazing. But as always, just knowing a few strong narratives or early projects isn't enough. You need a playbook for timing, research, and actually catching the next big rotation before the crowd. Here's how I'm staying ahead and how you can too. Track ETF inflows, treasury buys, and public company moves daily. Or just even easier, subscribe, turn on notifications, and let me do that for you. Watch the airdrop calendars for projects like Black Hole and OXGasless, because these are how new DeFi and AI narratives will explode from 0 to $1 billion in a single cycle. Monitor the next RWA integrations and super app moves. Robinhood is already piloting mortgage products and is likely to tokenize them on chain. The super app that blends banking, DeFi, and tokenized real-world assets is going to win the next cycle. Move before the headlines and with conviction when you see opportunity. Every cycle, smart money rotates first, the crowd follows second, and only the patient, early movers see outsized returns. That's the best edge. If you remember one thing, let it be this. The biggest money wave is never obvious until it already moved. BlackRock, Wall Street, and the new super apps have made their play. I've watched so many people sit on the sidelines, overthink the data, and then chase the move too late. Don't be the one blaming the market for playing the wrong game. The final rotation is here. Drop your altcoin picks below, guys. Let me know what you're excited to see for this next upcoming altcoin season. Subscribe, the notifications, and make sure you position before the next move hits. This is your cycle. Let's front run it together and ride this wave all the way to Valhalla. Until next time, guys, stay sharp, stack your sats. See ya.